Now, what's interesting here, the question here is for if we're in the capitulation area or not. So we can, on the longer term trend, let me just hide the trend. And all right, on the longer trend here, we can stay above 74 and still technically be bullish trend longer term, right?
Look, if
Um,
we get anywhere close to 74,
right.
I'm calling it time of death.
People are going to be really quite upset. But we need orders. We need something to propel the price upwards. We need that liquidity. And we don't have much liquidity right now. We're actually following the liquidity that we expect. If I pull up our global two, I believe this is the one. The liquidity that we've been following. So aside from the levels of where the prices are being pushed and pulled, we also take a look at the global dollar liquidity within the financial system. And as a proxy, we have our global liquidity index that's calculated here. And I don't know, Peter, if we've ever talked about this idea here that we have liquidity calculations, which you're seeing here in purple, that are contemporaneous. They're the signals as they are right now. But it generally takes about around 70-75 days for liquidity to actually bleed into the system. And so that's why you can see stuff like over here where the peak in price up here for Bitcoin matches a liquidity peak over here. That's offset. It's this peak from the liquidity actually flowed into the markets in October of 2024, but only showed up like peaked into the Bitcoin market in December 2024. So I offset that price, but then you also want to take a look at what's going on contemporaneously with liquidity, because then you can get jumps of liquidity like you're seeing over here, this pink, this purple area here, where there's a jump of liquidity that even though the liquidity is going down, the short term liquidity is going up, and that could also be short term bullish. So, for example, over here, this jump, this bounce that we had from this level over here up coincided with a rise in liquidity from the purple area, even though ultimately the lag liquidity is what we actually follow back down. Anyway, so I just thought that was interesting. But what's interesting there, it means that if we just go on the liquidity that has already been injected into the system, um, we're in a consolidation area right now. Like, we should keep falling for a little bit. It could be anywhere from here down to 88. Like I said, you never know how far it can go, but we have this downward pressure that's happening right now. Then I expect to have a bounce. So I actually wouldn't be surprised to see a bounce even from here back up to this trend area. So back up from, let's say, 96,000 to, let's call it, 103. And then it meanders and then rolls over again, heads back down, and then we basically just bounce around in this channel a little bit until we get to April, where we get a major bounce again. Actually, we could even end up capitulating sometime in March, like some real big drop in March, who knows from what level, and then bounce up from April. Now, what is encouraging is that we do have this increase of liquidity that has started. So we'll see. It came into effect. Uh, Trump became president January 20th, and liquidity started to take off, and so that could be pretty good. It could be this rise of liquidity that offsets the lag of liquidity that's there, and then we can get our bull market, blow off top and Bitcoin uh, over the next year or so, which I find to be pretty optimistic. So one of the things here that I wanted to mention is I think we talked about it, or I can't remember if I talked about it here on Traders Post, but Raoul Powell, he he makes the case that the reason why the dollar is strong right now, which is one of the main drivers of global dollar liquidity, right? That's the whole point. How the higher the value is for the USD in the forex markets, it means that people are paying a premium or paying more for access to the dollar, which means there's a shortage of it. If there wasn't a shortage of it, you'd have to lower the price in order to get people to buy it. So the fact that the dollar is increasing right now, or has stayed pretty steady. Take a look at the daily on the DXY. We got this bounce here around September 30th, 2024, all the way up, and that's a pretty strong move for the dollar. Now, I've been saying that I could see the dollar getting all the way to the 120s at the top of this channel before it rolled over, and that could very well be the case. But if we take a look at the last time Donald Trump was president, we had this run up where the dollar ran all the way up and then rolled over significantly. And so if we get this, that would coincide with me with this blow off top that we get in Bitcoin and then in the alt markets. So it's what I'm paying attention to. I just wanted to jump on here to discuss that. Um, so for the short term price expectation, if we hold this level, if we hold this trend line here, this trend from 96, 96.8 up. If we hold this, then fine. Then I could see us bouncing around here a bit, but chances are we are headed towards this $88,000 level. Like, to me, it seems pretty likely that we're going to head down there.
By when?
It's hard to say by when for this. It would have to be. Actually, no, it wouldn't be hard to say. It would have to be by February 10th or so.
By the dip?
I'm short. I've been shorting. I shorted since up here to this level, and so I'll only go long when the charts say. Now, if you're a long term hodler, of course, every one of these dips buy. If you're one of these people who want to bottom pick, like you want to get the absolute bottom, I would only be buying at these trends. So the buying levels would be right around here at 96, 96.8, then at around 93, and then again at 88, and yeah, 88, and let's call it 83. But ultimate bottom could be 74.
What do your signal people getting your signal, what should they do?
Well, if you're dealing with signal, you're dealing with 50x leverage, and you're in it for the short term plays, right? We're not in. There's no long term 50x play that I'm going to be advocating. Um, so you guys don't have access to these indicators unless you sign up to our group, and that sign up link will be showing up soon. So that's why I'm doing these videos publicly for now, so you can take a look. But essentially, we have we have these levels that are building, these bullish levels that are building. One at 104 or 1039, another one at 1017, and then now at 99. These are bullish levels. They're almost like a trigger where when the price rises up, they're going to just be gobbled up, right? In the same way that we had it over here. We talked about it a couple of weeks ago when we had this price rise. We had this drop down to this level, and then when it was done, we had to go and clear these levels, 1 2 3. We just cleared those levels, headed back up, and then it was only when that was done that then it petered out, right? So the more of these levels get created, which we have here, here, and here, the more these levels get created down, when we do hit the perfect level, boom, we'll shoot back up. So what I would suggest for the uh, people following my type of strategy is that you keep shorting. So whenever the price gets to VWAP, you just keep shorting lower until we close above VWAP again, and then you stop all your shorts. But until then, you keep shorting until you get to one of these wave areas. The next wave area is down here around 90, 91.4, and that's where I'd be looking for a bunch of volatility between there and 88 to get a pretty hard bounce. And I wouldn't be surprised if that bounce like launched us all the way back up to like a trend here. Like I would not be surprised if the price came and revisited somewhere around these areas, liquidated a bunch of shorts, and then maybe we bounce around for a bit.